This going here. All right, so this is Rhonda Thomas getting ready to do financial accounting, part of the project, and this is problem 5.5a in the project. So I'm in Cengage right now. And what you're going to do is you're going to get a list, and if you're going to print a list, now would be a good time, because I just printed mine. I just printed my list of my instructions. What you need to know is these are accounts with amounts in them, and we're going to have you put together 3 financial statements with this information. So I think it's kind of difficult to cross something off once you're finished with it. Now, I'm not going to do these completely. I'm just going to guide you through these. Okay. So, having said that, I thought of another way that you could put a list beside you while you're working, and I'm going to give it a try. Now, I've printed my instruction list, which, like I said, I like a copy, but if you don't like a copy, you could open up Word, for example, and just a blank document and put it on the side here. I can't go too far because then I'll get, no, I can't. Okay. That one. All right. And here's what I would do so that you could keep track, or you could do Excel. You could do Excel. It'll come in. So what I'm going to do is I'm going to make this list as small as I can, but yet still be able to read it. So I'm going to cut this in half. I'm going to use Snip. Okay, I have Snip docked on my taskbar all the time. So here's Snip. All right, so I'm going to snip this to a certain point. Actually, if you're going to snip it through dividends. Okay, and I'll explain why here in just a minute. So now I'm just going to copy this and bring that into this Word document, and now I can see it, right? Instead of having to scroll up and down all the dang time. And I know you can move things around. The other thing I want you to do now is we're going to do another snip. I'm going to snip it from sales all the way down through this stuff, because be careful. Oftentimes there is additional information down here in the requirements that we need to know, okay, in order to make this work. Oh, don't you dare throw me out. Okay, so I'm going to click snip again. Maybe you guys already know all this stuff, but that's okay. I don't mind. Doesn't surprise me if you do. Okay, snipping sales on down. If you understand that the division line between dividends and sales is basically where your income statement starts. And the cool thing is, now we're, all right, so I'm going to copy and put it in here. So what I'm trying to tell you is the hardest part a lot of the time when it comes to doing financial statements is what goes where and in what order. Okay, so does anybody remember what financial statement we do first? Which one do we do first? You remember? We do the income statement first. All right, so let's get this going, and maybe I can do it. Maybe I can do it, or at least part of it for you. So let's go with the income statement. By the way, this is the fiscal year ending March 31st. Okay, so let me see. So we might as well just start off. Here's our labels. Here's what I've got open. I've got instructions, labels, and income statement. That's what I would have open. And then I've got my instructions over here on the side, which I think is very helpful. All right, so let's go down. So we're going to grab the label for the year ending March 31st. So if you want to follow along, that's fine, or if you just want to do it later, that's fine. We want to put that in, okay? If you need an income statement to look at, you could, I've got Morning Joe's to look at. You could look at anything from the ebook, but I would go put labels in if I could stand it, okay? So what's going to happen is the top of an income statement. Here is my income statement stuff. Does everybody see this? Here is my income statement stuff. This is pretty much my balance sheet stuff. So there's where it splits out. And other than it not being in perfect order, it's pretty good. Okay, it's pretty good. So, and this is an income statement once we have inventory. Okay, so we're always going to start off with sales. Okay, so let's get started. Sales and my sales, and sales is usually the biggest amount on the list. And in this case, it is. So 11,403,800. Then it's the cost of goods sold, but you have to remember how that I probably, now that I'm thinking about it a little better, cost of goods sold. I would really rather do this on an Excel spreadsheet because you're going to have to do some calculations. So give me a second. I don't even know why I even bothered with opening Word. That was dumb. So let me just start off with a blank and I'll go get these and copy them in to my Excel. Because you're going to need Excel or something to add things up. And as I've been trying to encourage you all semester, being able to see what you've put in is very helpful. Okay, so now I'm going to copy this one and bring it in. But I also have a copy in front of me. All right, and then I'm going to get rid of Word. Kick Word to the curb. Oh, all right, so here are the amounts that we need. I'm going to scoot these over so that I can do some calculations if I need to. I think anyway. Let's move you over here. You can always make it a little bit smaller. It'll line up better. But I actually copied these on purpose this way because from here down is going to go on the income statement. And then we also need, so the first thing they say is to prepare a multi-step income statement. That's what we're getting ready to do. So here we go. Our cost of goods sold, I'm just going to put it in as it's saying here. You have to know that that gets subtracted and there is a description called gross profit that goes next. Gross profit is not an account. It is a subtotal. Okay, so I'm going to need a couple of columns here. I like my columns a little bit larger. Okay, so I can add and things. All right, so we're doing the income statement. And I'm just going to put that down so I know what I'm looking at. And I'm not going to put down the names. I'm just going to put my amounts in. So, and I want to subtract the cost of goods sold. And then I want gross profit so that I know what that calculates to. All right, so we had to find that. So that's part of learning the income statement. So there we have it. Okay, the next part is going to be operating expenses. Okay, operating expenses. So let's see what we can find. And this is going to be under labels. Okay, because they say a label goes here, right? Label, label, label. So this is going to be operating expenses. And like I said, if you wanted to get something from the book to look at while you're doing, which I think is highly smart, I would go get This is the multi-step income statement. Okay, so here's what we're looking at. What does that say? Operating expenses and selling expenses. We want those two labels and we want this label put in. Okay, so let's go do that. It's definitely helpful to go look at it. Okay, so let me move it over here. Okay, so now we want operating expenses and selling expenses and admin. So I recommend trying to put labels in as much as you can at first. Okay, so operating expenses. See, let me pick up the pace here a little bit. Operating expenses, then you're going to get selling expenses. Because we now have product, our income statement is broken up quite a bit differently than it was before without product. Okay, so we want selling expenses and then we want administrative expenses. Okay, that's where those labels go. Okay, and when we get down here to the bottom, this other label, right? Let's look. What's that last label? Other revenue and expenses, right? Now, we don't know if we have a net income yet, but hopefully we do. Go find other revenue and expenses as that second label. Okay, second label. So it's up here. Other revenue and expenses. So this is just a big old put together a set of financial statements, but it makes you put in all of the information. It's not just the drop down, right? So let's go with selling expenses. So now here we are. Which one are we going to pay attention to? We're going to pay attention. So we're done with sales and we're done with cost of goods sold. So I have the physical copy. I like to cross it off once I'm done with something, right? So I know that so that I know that I have, and see, I even draw a line. I draw a line in between anything above dividends, anything below dividends, and then I cross off once I've used something, because usually you don't use anything twice. All right, so my selling expenses. Now, how do we like to list expenses? We like to list the most expensive first. Well, look at that. They've done it for you right here on the list. You say, what? You look here, usually wages or sales salaries, salaries and wages tend to be at the top of each category of expenses. And sure enough, it is. So I'm just going to use, and I can type in what I see there. Sales, salary, expense. Okay, and you're going to need to put in the amount that's there. Okay, the next one then is advertising expense. Okay, and put that in. And then depreciation expense, store equipment. Okay, it is. So you just go through these and put this in. Miscellaneous, where am I at? Miscellaneous selling expense. So they're breaking it up. Why do you care how much you spend on sales? Well, sales cost money, advertising costs money, and we want to make sure that we are getting our bang for our buck. So this should be now total selling expenses. And if you couldn't remember, there it is, total selling expenses. There's your example. Okay, so it's nice to see that total, and that should be an amount description. And all right, so total selling expenses. Right there. And then I need to add these up so I know how much they will be. So I'm going to add these up here. So once again, this is how I would do it. You do it how you feel best. Okay, total selling expenses. Notice that total goes in the middle. Okay, and then now we're ready for admin expenses. So admin expenses start with office salary expense. Okay, so I'm just going to put these in. See if there's anything I can help with. Rent expense. Okay, depreciation expense, office equipment. Notice the store equipment's up here under sales, but office equipment is down here under admin. Okay, admin expenses tend to cover the company more like an umbrella, and sales are much more specific. So 45,900. Okay, then we have insurance expense. Office supply expense. Then we have a miscellaneous for admin. Okay, and now we're going to have a total. So we got to go get total admin expenses. And then we need to add that up. So I think you're probably catching on, but I'm still going to do a little more just to, I'd like to at least get you through I'll just go as long as I can. And if I can do it all as an example, then I want to see how it's grading here. That's another thing. So now I need the total of those. Okay, so that gets moved over. I don't think I did that right. And my commas. Let me put my commas in. I like commas in my numbers so I can see. There we go. Okay, so, yep, I got one too many zeros here. That's why it's a little wonky amount. Okay, there we go. There we go. All right. And then finally, if you don't know where to go look. Total operating expenses. That's in there as a negative. Now, whether or not they want us to, cost of goods sold is in here as a negative. I was never taught to do that. I'm going to go ahead and check my work and see what, okay, so that is in there correctly as a positive. They know that you're supposed to know to subtract that. So don't put that in as a negative. My rent expense is wrong. It is $101,000. So there is another issue. And then I need to fix that on here. So I needed a zero and I needed to take one off. So then that becomes 892,000. Even better. I'm glad I have that on a spreadsheet. And so far, so good now. All right, so now we're going to do total operating expenses. And so we want to add these two together here, and then that all gets subtracted from gross profit. Okay, so I'm gonna add the selling and the admin together. So right here, it's 2,529,200. Now I'm gonna subtract that from the gross profit, right? And we're gonna get income, operating income, okay? Operating income, and if you aren't sure, there it is, operating income. So they may put some on here you don't need. That's okay. So now you have to remember to subtract, right? This gets subtracted from gross profit. So here's gross profit after we subtracted the cost of what we sold. And then we have operating income of $1,032,500. Now we have one interest expense. So interest expense goes in after the operating income. Okay, and they say interest, I got an interest expense of $11,800. And I need to understand to subtract that. Why? Because that's an expense, right? If that was a revenue, we would add it. And it looks like we're going to have a net income. So net income. And I would want to subtract that interest amount, but I don't want the whole thing. I just want just that. Okay, so it looks like our net income is $1,044,300. I'm going to check my work. Okay, what did I put in wrong? The amount is incorrect. Well, thank you. All right, let me see. 11,800. This was good. 1,032,500. Maybe this needs to be in as a negative? I don't know. Nope. Okay, I must have just entered it incorrect. So now I want, okay, equals this minus this. Probably didn't subtract it. There it is. There it is. Okay. So $1,020,700. There we go. Okay, so you have to subtract the interest. Now we're going to use this amount. So now I know this is net income. I'm going to label that in my spreadsheet so that I know how much that is. And now I can let go of the income statement. So I don't have to have as many open. Right? Yeah. So now we're going to the statement of stockholders' equity. On the way down there, we're going to grab the label for the year ending, because that's the label that goes on the statement of stockholders' equity, just like the income statement. Then we're going to grab some other labels on the statement of stockholders' equity. Here it is. They've got balances at the beginning of a year and balances at the end of the year. So let's go see if they have those as labels. Okay, probably there's balance at the beginning, balance at the end. So let's go put this in. Okay, let's put this in where they go. One goes on the top line, one goes on the bottom line. Because the point of the stockholders' equity statement is to show the change in these accounts from the beginning of the year to the end of the year. So we need to put in a number here. Now be careful. We need to read. So prepare a statement of stockholders' equity. Additional common stock was issued during the year. Okay, so here's what we're talking about. We can go ahead and put the ending balance in common stock, but we're going to show that 75,000 was actually brought in. So we're going to go find the description, issue stock, something like that, issue common stock. Yep. So the balance that they have in common stock includes that 75,000. So let's put that balance in there. So common stock is up here, 501,600. I'm putting that down here. Now I'm going to back into the beginning balance. The beginning balance. So the beginning plus the amount that was issued now equals this amount. Okay, so now I'm doing the statement of stockholders' equity. And if you need to leave, very good. I'm going to keep going just in case somebody needs it. So I'm going to keep going. Okay. Merry Christmas. Happy holidays. Have a good break. Hope to see you back. Maybe in the spring. See you, Riley. Okay. So we're going to subtract the 75,000 from the balance that we have. So I'm going to put that amount in. And I'm going to subtract the 75,000 to find out what our beginning common stock was. So there you have it. So retained earnings, we got to put in exactly what we are told. 2,786,300. Now we need to add across, find out how much that is. And once again, it's just nice to have a place to do that where you can watch your numbers and make sure you don't put something in incorrectly. Okay, so it looks like we had a beginning total of stockholders' equity of 3,212,900. When we issued the common stock does not affect retained earnings, so we put a 0 there. But it didn't hold it. Okay, it didn't hold it, but we just bring 75,000 over. Now we're going to do our net income. Oh my gosh, I forgot how much we did. Well, there it sits on our spreadsheet, right? It affects retained earnings. It does not affect common stock. So common stock gets a 0, but it doesn't stay. I would put a 0 in there. You know why? That way I knew I checked, made sure everything was good. So zeros have their places, if nothing else, to show somebody that was looked into. All right, my net income, and then we simply bring it over. And then the last one is dividends. Okay, dividends. Now, sometimes they get kind of picky about dividends. So let me see what the instructions are saying. Be sure to account names in the instructions, use the minus sign to enter any deductions. So in this statement, we use minus signs for deductions, but up here in the income statement, we don't. I wish they'd make up their mind. So we're going to put the amount of dividends, which I've got negative 99,900, and we bring that amount over. Okay. And now we need to add these 3 and add these 4 to know what the totals are. Okay, so, and then we'll do the balance sheet and we'll be done. So if you want to stick around, I'll go ahead and do it. It's okay. It won't take very long. I don't think. All right, so there is my total for my retained earnings. And you're going to need that total. So if you're going to put it in the spreadsheet, be sure you name it, because that's the retained earnings you're going to need for the balance sheet. Okay. And then finally, the total stockholders' equity is all 4 of those. So I'm just going to key it in, all 4 down here for total equity. So there's nothing wrong with knowing that too, because you're going to need that total on the balance sheet. And then once again, and we want a total here. So it is 4,208,700. And then I'm going to label this total stockholders' equity. Okay. So I think we've got 2 of the 3 done. So far, not too bad. Okay, now let's do the balance sheet. Okay, let's do the balance sheet. The other thing we need to think about for the balance sheet, in the instructions, it says that there is a current portion of the note payable. A note payable is a long-term payable, and there's always a portion of it that's due now. So we're gonna have to put that in current liabilities, okay, current liabilities. So notice our note payable here is 296,000. See you, Daniel. Good to meet you. And maybe we'll see you again.
Maybe.
Yeah. So anyway, we're going to be splitting up this note payable into the short-term piece and the long-term piece. But we don't know what that short-term piece is unless we follow these instructions. Okay. So now I'm going to put the balance sheet down and see if there's going to be some calculations. You betcha. Have a good one.
You too.
Yep. So I'm going to bring these down because our balance sheet stuff is actually up here. So if you guys need to go, that's okay. I'm going to keep filming. And then if anybody has questions, they can follow along. Have a good holiday.
You too.
Okay, take it easy. Thank you. Thank you. Merry Christmas. Thank you for your loyalty to coming to class. I know it's not easy sometimes. So have a good one. All right, we're gonna finish this balance sheet now. So I don't know if anybody's listening, but I'm talking. So nope, it's just me. That's okay. I don't mind. Okay, balance sheet. Now we're ready. When it comes to the balance sheet, you want to grab just the date and time. Okay, the date and time. So not for the year ending or it'll be wrong. Okay, now I do my balance sheet a little weird. I go down to the bottom and we want a label called current liabilities. Okay, and if you need to see a balance sheet, here it is. Okay, we got current liabilities, long-term liabilities, and total liabilities. So I think we're in that situation for this. So, and we could go look up here in the list, right? So we've got current, let's look up here. Yeah, here's our labels, current liabilities, long-term liabilities. Okay, so I want long-term liabilities. I'm going to put my labels in. There it is. Okay, I'm also going down here to stockholders' equity. Stockholders' equity. So at the bottom of this is going to be total stockholders, total liabilities, and stockholders' equity. So I'm going to go get that title because that is half of the balance sheet. So it goes at the bottom. And then total equity is right above that. And we know what total equity is, so we can key that in for no problem. So total equity, my brain just doesn't want to see. Total stockholders equity, here we are. That's going to be right above that. And it says amount description. Okay, I'm going to put in the amount I've got for the stockholders equity. There it is. And we're going to report common stock. Okay. Common stock is 501,600 from the list. Now be careful, retained earnings. You cannot put this number in retained earnings or you will not have a balance sheet. Okay. That's probably the best lesson about putting this balance sheet together is the fact that you have to understand that you have a different retained earnings amount after you account for net income and dividends. Okay, so let's see where we're at. No, we don't have the total yet, but we'll get there. Okay, so then I would go to current liabilities. So that's going to begin here. Accounts payable, We got 1, 2, 3, 4. We've got 1, 2, 3, 4 liabilities. So let's put these in. Accounts payable. Okay, my accounts payable. I definitely like having this beside me. Salaries payable. Okay, customer refunds payable. Estimated coupons. That's a payable. Putting in amounts as I go. And then the note payable. Now, I think this is an amount description. This is an account. So we're going to go look for an amount description that says the current portion of long-term debt, or something like that. So there it is, note payable, current portion. You're going to have to use that. Okay, not the account title. Okay, because they want it broken up, and that's why they told us how much of that note is expected to be paid this year. Now we're ready for total current liabilities. Okay, and so I would need to add these up. That's fine. Make sure, and that is 505, 200. So let's see, we move over 505, 200. Okay, now let's do some long-term liabilities, which I think there's only one, and you got to go use, they want you to use the account. So note payable, and then what did they got? Amount description. Okay, so what this is the long-term liability. So they want the account. So I'm going to see what happens here. Notes payable, note payable. No, I think they want this up here. Let's try it. Okay, I think they want this. If they don't, we'll try again. So now, how much is notes payable? We've got notes payable listed as 296,000, but we've already listed 58,000. So we're going to subtract 58,000 and we'll then get the remaining amount after subtracting the current piece, 238,000. Okay, now we're ready for total liabilities. And okay, so we're going to add these two amounts here. Okay, so this amount gets added with, all right, so I'm going to add these together. 505, 200 plus 238,000. I got 743,200. Now we add these two together. Okay, let's see if we got it. And now we add these two together and we know half of our balance sheet. So equals what we just found, which is the liabilities plus I've got total equity up here. So here is half of our balance sheet. Okay, now you can't always do this, but in these you can, which is kind of nice. Uh-oh. Okay, you don't like it. Just a minute. I keyed something in, probably wrong. Let me see. Total shareholders equity, they say that's okay. And okay, I thought I added it together. All right, let's try it again. Equals total liabilities. I'm gonna put that label here just so I remember that's what it is. Never know, total liabilities. Okay, and now we want to do, I'm sorry, yeah, and now we want to do half of the balance sheet. So we're going to take total liabilities and add shareholders, and they said that was right. And now we're going to add these two together. Hold on, I'm about to cause myself more problems. Okay, let's do it. Equals this amount plus this amount. I got 49,51,900. Okay. Okay, so that's good. Well, guess what? Total assets are going to be exactly the same. So I'm going to start off at the bottom of total assets. Okay, and I'm going to make it balance to that. So there's what it is. Okay, now I'm going back up to the top. I'm putting labels in. Labels are current assets and property, plant, and equipment, usually. Property, plant, and equipment. There it is. Okay, and we get a total current assets and a total property, plant, and equipment. Okay. So property, plant, and equipment is right here. Okay, so let's put that in. And then we want total current assets right above that. No, we don't know what they are yet. Okay, and then we want total. Okay, this is total assets. So now we'll come back to that. Okay, let's do the current assets, cash. Okay, so we're actually going to look right here. Okay, that's the amount because this is the adjusted trial balance. Okay, so 232,700 accounts receivable. 957,000 inventory is 1,668,600. Estimated returns inventory is 21,300. And then office supplies and prepaid insurance. Okay, so office supplies, 15,600 and prepaid insurance. Okay, that prepaid insurance. Okay, now I want to total my current assets here. Okay. So if I've got these in here right, our total current assets should be 2,913,200. Okay, and then we've got property, plant, and equipment. So every asset, so we have 1, 2, 3, 4. So store equipment. Okay, store equipment. We're going to put its amount. Then we're going to do accumulated depreciation. Okay, accumulated depreciation for the store equipment. And that is an account title. Accumulated depreciation. So here it is. Accumulated. There it is. Okay. That gets subtracted. Let's see. All right, so our amount is 1,827,100. I don't know if I need to subtract, put that as a negative, but then the book value, okay, the book value of the store equipment. There it is. So if we were to sell this store equipment, we would want to know the book value, because that way we could get an idea of how much remains and of the value of what we paid. So 3,594,800 minus 1,827,100. Now, let's see if it says anything about use the minus sign to enter deductions. Okay, so we're trying to listen to what they're telling us so we can get it right a little easier. Okay, so I'm going to do this math here. So over on the next column. Okay, and then now we need office equipment. And its value is up here because it's at the top. So 827,000. We need its accumulated depreciation. If you don't want to spell it out, not depreciation expense, accumulated depreciation. Okay, so we're going to put this in as a negative because the instructions told us to. So 556,000. This also tells somebody that understands more about accounting how old these assets are, right? How much they've depreciated, which means they've expensed them or they've used them. If something is fully depreciated, it'll have 0 as a book value, right? And so now we want the book value of the office equipment. And then we need to calculate that. Okay, so let's do the math. All right, 200. So here's the book value, 271,000. All right, now we're ready for total property, plant, and equipment. There it is. It's nice to have those labels because I didn't have these labels and it would have made my life a little easier. All right, so now we're going to add these two together. So this is the total, so equals these two here, equals the total the total current assets plus the I didn't do the total of that yet, so hang on just a second. I need to do the total the total property, plant, and equipment. Let's do that. Total PPE is what that would be known as. So total PPE. So we need both of those. All right. We need this one for the store equipment and office equipment. All right. So this is 2,038,700. Now we add, so this is total current assets. All right, and so now we're ready. And I believe that equals, but if you're a good accountant, you're going to make sure it does. All right, so current assets plus total PPE Yes, 4,951,900. We did it. All right, so that's it. I did more than I said I would, but that's okay. This is a really good experience, putting all this together. So I'm going to sign out, okay? So I wish all of you a good break. Keep up the hard work. I hope to see you next semester. And keep pushing. It'll be worth it. And then now I'm going to stop.